Let's say I have 5 properties and each property is on different LLC. So would that be specifically to that LLC in that property? Or if I claim one of them, it will be on the record for all 5 of them? What is the difference between a homeowner's insurance and fire or landlord's insurance?
Yeah, I mean, that's a good question. I think that, the most straightforward answer is like home insurance is for...
So let's say we have a property that, I don't know, we had for a long time and it's occupied, and now we need to replace the roof. There was a leak or whatever, so we put brand new roof on the property. Can we get a discount on insurance policy if we installed a new roof? Hello and welcome back to the Philly Landlord Guide. I'm your host, Yuri Skripnichenko, and the guy with a crazy last name, do not try to remember, just think of me as the Philly Landlord Guy. Today, we are diving into a topic that every landlord and real estate investor needs to know: property insurance. It's not the most exciting subject, but getting it wrong can cost you everything, including your investment and more. Today, we're joined by Tom Cassidy, a licensed property insurance agent who specializes in working with real estate investors. We're going to get into the details. What is the difference between replacement value and market value? What are the NUP and TUP and why you need to avoid it? And so much more. So without further ado, let's welcome Tom and get going. Hi, Tom. Thank you for joining us. Can you tell us a little bit about yourself? How did you get into insurance business, and especially in focusing on real estate investors and investing properties?
No, sure, Yuri. Thank you so much for having me on. We certainly appreciate it here, and I'd love to talk about insurance. I mean, not everybody does, but thank you. Yeah, you know what? I mean, I've been personally been in the business since it was 98 or 99. So it's been a long time. You know what? It was kind of like my uncle had an Allstate agency, and I worked with him for a bit, and then kind of moved on to other things from there. But I have been in the business now since like around 1999, and I've been with Albert Shannon here for over 2 years. I do really appreciate here that we have a very wide selection of carriers, and that we have that we do work with landlords so often, investors, because it's just a great business for us because of we love helping people, we love protecting things that are important, and we also think that people own sometimes multiple properties, and there's a lot of word of mouth that goes around, so we don't have to do a lot of advertising. I think we do a really good job with the customers we have, and everyone tends to talk to each other, so it's worked out very well, and we work very hard to make sure we have the right products and the right tools to give you guys the best the best price and the best protection.
Okay, so it sounds like over the last almost 30 years, you had a lot of different experience with different insurance products. So before we dive into any of the insurances, can you tell us what is the difference between, you said you started with Allstate, and what is the difference between having a broker with a specific agency like Allstate or whatever, State Farm, versus having a broker who has access to multiple different carriers?
Yeah, I mean, like when you are in the business, we kind of call it like a captive agent, but you're representing a carrier like Allstate or State Farm, and they do try to be a little bit of a jack of all trades, and they do have a pretty wide selection of what they offer, but they're certainly not like specialized. And as a large nationwide company that's focused on home and auto and do a little bit investing on the side, there's just you're losing out on a lot of niche markets and a lot of carriers that will specifically work and have really good pricing with investors. So I think that the biggest difference is it is an eye opener when you leave like an Allstate agency about how much else is out there and how much you can do that you couldn't do before. We do have a solution for virtually everything, which you don't have that when you're working with one or two carriers. So having that wide selection. I mean, somebody joked actually somebody who works in Allstate agency kind of joked with me recently that being a broker is so much better for the customer, but so much harder for the agent, and that is sort of true because you're not just running one quote and giving that one quote and based on your rules, this is what you can do. You have like 50 different carriers with 50 different rules with 50 different markets, and it's a lot more to keep track of, but it really results in a much better product and better pricing for the customer.
And to get right here with terminology, what is the difference between insurance broker and insurance agent?
The terms are used a little bit loosely sometimes, but I guess when I'm saying like an insurance agent, I really mean somebody who is an agent representing a carrier. Whereas a broker has access to a lot of different carriers. Like we do technically can broker out other things, even though we're a broker themselves. We can broker to other brokers if necessary. But I think when you're looking at an agent, you're looking at somebody who has a very limited selection of one or two carriers. Whereas when you're talking about a broker, you're talking about somebody who can be appointed with as many carriers as they would like, as long as they can gain an appointment.
Okay, sounds good. So I hear a lot from like local, and not just local landlords, that they do not trust smaller insurance companies for one or the other reasons, because they may not provide you the coverage that you're looking for, or it may be much harder to get the claim in through when you have something happens versus, let's say it was, again, pick on Allstate. So is that true, or is that not true?
No, I would say that's not true. I kind of can maybe understand that perspective a little bit, especially because these national companies, they advertise like crazy, which of course is an expense for them that they do have to pass on. I think you have smaller local companies or smaller regional carriers that they're filed the same way with the state, and they're approved by the state. They do rely on an agent to kind of represent them and get the word out. So I think the best way to answer that is that, we don't represent anybody that's not an A-rated carrier, and we don't represent anybody that isn't, of course, filed and approved with the state of Pennsylvania Insurance Department. So, you know what, like we've had just very good experience here. We have like over 30,000 properties that we insure, and we have had really good experiences. If there's I think maybe all this time, there's one carrier that we weren't crazy about, which is because we stopped using them. But I think that we vet out the carriers. The state of Pennsylvania vets out the carriers, and you can in the end find the right market with the right coverage that isn't spending a lot of overhead on advertising.
Okay, and you mentioned that you're working with A-rated carriers. What does that mean? What does it mean, A-rated carrier, A minus, B, whatever?
Yeah, I mean, you're basically looking at AM Best, where it's kind of like their financial rating with their ability, how they are rated by AM Best with the ability to pay out their claims and the ability to be financially sustainable. So there's AM Best, and there's another carrier, I think another rating, and I forget that service name right now, which we probably don't want to put in, but yeah, that's the short answer, is how they are rated by AM Best with their ability to pay their claims and their financial stability.
Okay. So basically, you want to have a rated carrier at any time. That means that they are the best company. They have enough funds to fund whatever operations they're having.
Right.
Okay. So now let's go and dive into insurance products themselves. There are so many of them, and sometimes it's getting so complicated, especially as for a regular landlord, when you have a property in Philly and you're trying to insure it, let's say when you're rehabbing it or when it's sitting vacant, or when you have a tenant, you have different products and you need to understand how they work and what they are. So let's begin with a simple explanation of what is the difference between a homeowner's insurance and fire or landlord's insurance.
That's a good question. I think that, the most straightforward answer is like home insurance is for owner-occupied dwelling. There's primary homes and a secondary home, but primarily the owner occupied as a primary home or a secondary home, whereas a landlord policy or dwelling fire is something that is tenant occupied. And you did touch on, which is true, is that's another avenue, is like if the property is vacant or if it's under renovation, that's another type of insurance. But basically you need a dwelling fire or landlord policy if you're an investor with tenants that you don't live in the property.
Okay. Yeah, but we'll touch base on those other types of insurances later, what you need to have when you're renovating or vacant. But so the difference between landlords and homeowners, it basically speaks for itself, right? You're a homeowner, you live in a property, you need homeowners insurance. You're a landlord, you have your rental property, you need to have landlord's insurance. So what happens if you have a rental property with a tenant in place and you have homeowner's policy on it, and you have some kind of event that you want to claim your policy for?
Yeah, I mean, that can get very dicey, and that's why you always want to have the right coverage on there. I mean, it can depend on the situation, it can depend on the carrier, but you're risking if there is coverage or not. If they do pay it, they could very well drop you after paying it because they feel like there was misrepresentation. Because technically, if you really look at the contract that you sign when you start a policy, you have to notify of changes within 30 days. And if you sign that, hey, this is where I live, and then you've been renting it out for 2 years, and then you have a claim, you may not have any coverage, or you certainly, it's going to be dicey. And if for some reason they do go ahead and cover some of it or cover it, they are going to drop you.
Okay. So when you start the policy as a landlord or as any person, when you talk to an agent or you talk to a broker, is that your responsibility as an agent to ask all of these questions to figure out if they need to have homeowner's policy or landlord's policy?
Yes. I mean, I would say it is. Yeah. I mean, it's a shared responsibility because I have to ask it, and you do have to, answer truthfully, and then we both sign the contract that, this is how we believe, the property is going to be used. But, I guess, but at the same time, I don't check in with every single customer every month and say, hey, has your usage changed?
Right. But when a client comes to you and they want to start the policy, you will ask them what kind of policy it is. And if they do not know, you kind of guide them through what they need to have.
Yeah. I think we do our best to walk it through and make it very simple, and just kind of, like I said, making sure we're going down the right path for the right coverage on that property. Because that is the end result, is that, you always want to make sure there is the right coverage. And if there is, unfortunately, a claim situation, that is going to be, handled properly.
Yeah, we recently had an issue with one of our clients. We require clients to add us as additional insured onto the policies, so that way everybody is protected. Plus, we can keep track of policies, what happens if it's renewed, if it's not renewed, that the policy is active on the property. And we recently had a problem where we had to file a claim for a flood at the property. And at the time of filing, we found out, well, we did not file, the owner filed. But at the time of filing, we found out that they had owner's policy instead of landlord's policy. And of course, they didn't cover anything. And the problem was that landlord literally just switched insurances about a month before this happened. And somehow we did not get notified. Maybe the notice got lost on the mail or something happened. So we didn't know about it. And the landlord, I do not know why they did it. They didn't know better. So somehow they were able to get homeowner's insurance on the rental property. And nothing was covered by that policy. So you definitely need to make sure when you have a rental property that you're getting the correct product. Do not get homeowner's policy, or it will most likely will not cover anything. When you get a policy, so let's say you have a new client and they come to you and they tell you that, hey, Tom, I have this property in Philly. Let's say it's 123 Main Street, whatever it is, it's a duplex. What do they need to know about the policy, or what questions will you ask them to actually provide them with a quote? What is the difference between replacement cost and market value? What does it mean for the landlord, and what landlord should think of before giving you answers on those questions?
Sure. I mean, yeah, I mean, we're going to always start with, of course, like the property address, if it's vacant or not, or is there any renovations? Is it tenant occupied, or is it home, or is it 2-unit where the owner lives in one and the tenant lives in another? But that's where we start, and updates for some of the major systems in the house, especially the roof. So when you're looking at market value, replacement cost policy is, I'm just going to say better, for lack of a better word, but replacement cost policy is going to give you enough money to rebuild that property exactly the way it was. So that is, the kind of best coverage you can get. It is what we recommend. It's what we do our best to use as much as we possibly can. Market value is based more what the property market value is worth, which is for something that can change from time to time, but it's also not going to necessarily give you enough to replace or to rebuild. It is something that is like, it is in a sense covering your investment, but also with smaller claims, the coverage isn't necessarily as good. And so we really recommend that replacement cost, because just minimizing your out of pocket, and it is enough to rebuild, instead of looking at what an older property is worth, or we're giving you enough to rebuild it just the way it is and up to code and all that other stuff.
So for the replacement cost versus market value, the market value would be different, depends on the market value, right? Where your property is. So
yes.
If you have a property in Center City or somewhere, I don't know, in Manayunk, it's probably going to be more expensive than if you have a property in Frankfurt or Kensington. So at which point it makes sense for an investor to make a decision if they want to go with the market value versus the replacement value?
I mean, the only thing I can think of is sometimes people think there's cost savings with the market value if the market value is much lower than the replacement cost. And that can be true. A lot of times we have the right carrier that's not as true, because even market value policies are really driven by factors with the house, like the square footage and the age of it. But you know what, like market value takes in a lot of stuff that insurance companies are normally not interested in, and it doesn't really affect, as far as, like land associated with the house, the neighborhood, and all that kind of stuff. I mean, if you have a kitchen fire, it doesn't really matter how much land you have or how much, what neighborhood you're in. You need your kitchen to be workable again. So we do really recommend replacement costs, although, I know there's a different lines of thought about it, but for us, like it's a better coverage, and we don't find there to be a lot of cost savings with market value. And you're right. And there's no need to go to market value either. If the replacement cost is $300,000 and the market value is $500,000, you're already covering it to rebuild it exactly the way it was. So those factors that are covering the market value aren't going to really affect your rebuild. So we don't feel like you would ever go higher. I don't see people doing that too often unless they're really worried about their loan, but they still don't usually do that once they recognize that their replacement cost is covered.
And what happens if there is a mortgage on the property and they have specific requirements what it has to be covered for, or at least the minimum amount that it has to be covered for?
Yeah, I mean, that's something that is it's never been a problem, because when you're looking at that situation where the replacement cost is $300,000, the mortgage is $500,000. as long as we supply the mortgage company with the replacement cost estimator and that it is a full replacement policy, we've never had an issue where the mortgage won't take it because it's less than the loan amount.
Mhm.
It is something where sometimes a carrier will, allow you to bump it up a little bit. You're paying for coverage you don't need, but really, 99.9% of the time, the mortgage is going to accept the replacement cost estimator of the carrier, and they're not going, and they're going to be understand that their property is well protected, their collateral is well protected.
Okay. So one of the other things in a policy, in any policy that you have that can affect your premium, how does higher deductible impact landlords' premium? And is it a smart way for investors to play with the deductible to reduce the premium on the policies that they have?
Yeah, I feel like it is a smart move. You're right. If you have a higher deductible, you have to pay out more in the event that there's a claim. You have to pay out more money out of your own pocket, but you also are paying much less in premium per year because you have that higher deductible. So, I mean, obviously, you want to be able to afford that deductible and, comfortably afford it with your cash flow and that kind of thing. But other than that, I mean, insurance is there for you. But it's always not a great idea to put in a small claim anyway. Just because you don't want to, if you have a $2,000 claim, do you want to put that in, have $1,000 deductible, get $1,000 payout, and then you have a quick claim on your record? You might lose a loss-free discount. You might have a harder time getting insurance on other properties. So, just generally, most landlords are not going to use their insurance unless it's a very significant claim. And you're right that it saves them money. It saves them money in the long run too. If you look at like the average, if you average like one claim every 10 years and the amount of money you're saving on premium versus the amount you pay out on your deductible. So there usually there's definitely a cost savings on the insurance, and there's an out-of-pocket savings usually, unless you had extremely bad luck with a lot of claims. So I just think you have to just be wary of your cash flow, and make sure, if a disaster happens, you can afford to pay out that $5,000 deductible or the $10,000 deductible. But it's overall a good strategy.
Is there any common number that you see for Philly landlords, what they usually choose as a deductible number or amount?
I don't see anything under than 1,000, and more people are going to 2,500 or 5,000. It depends a little bit like on the carrier because not every carrier offers every deductible, and it's funny. There are different philosophies where some of them will encourage these high claims or these percentage deductibles where it's like a percentage of your coverage. So if your property was insured for $400,000 and you had like a 1% deductible, that's a $4,000 deductible. But yeah, I would generally say that at 2,500 or 5,000 is probably the most common landing spot anymore. Whereas, maybe a few years ago we would have said 1,000.
Okay. So when we're getting a regular landlord's policy in Philly, what are the standards perils that are covered and what are standards exclusions from the policies that landlords need to be aware of?
I mean, depends a little bit. I mean, most of the time a landlord is getting a Form 2, which is covers like 18 major perils that you would kind of expect whether it's wind and hail and fire and, most of the stuff, pretty much anything, most of the things that you would expect to be covered. I have like a list of 18. I don't know that anybody wants me to read them off, but as a general rule, yeah, like a pipe burst, there's hail damage to your roof, there's wind damage, somebody breaks your window, those kinds of things are covered. So that is as far as what's covered. The kind of more interesting conversation, maybe at least to me, is like what's not covered.
What is not covered? Yes.
Yeah, I mean, you kind of touched on one thing earlier with flood, and I think if you're in a flood zone and you have a mortgage, which a lot not everybody does, mortgage is going to require flood insurance, but there are people who have floods, even though they're not in a flood zone at times. But I think the things that if I would really to focus on as a landlord, the kind of the maybe three different coverages that are not automatically included in most policies, but they may be relevant. Is number one is sinkhole coverage. That's an exclusion in most policies. You can usually there are some carriers that have sinkhole coverage automatically, and then there are some carriers who will offer it as an add-on, and then there's some carriers who just won't offer it. But I think sinkhole coverage is something that certain parts of Philly people are really aware of. I think I call it like water backup coverage, which would be like either water coming into your property from the sewer, or if your sump pumps failed, if you had sump pumps in the basement and they failed, you can usually get, most carriers will offer $5,000 or $10,000 of coverage, which is, certainly not an excuse for a flood policy, but if your sump pumps fail, there is some coverage there. So water backup, and then underground service line is something that some of my Philly landlords are very aware of too, which would be, it really is excluded generally because it is more of a wear and tear item in almost every circumstance. But the biggest thing is that if your connection to the sewer, to the public sewer connection breaks, if your pipe breaks or fails, that can be a very, very expensive repair. Because you're talking about digging and maybe going through asphalt and all kinds of stuff. So that is a coverage that is reasonably affordable that sometimes people will look at. There is a flip side of all this is that, hey, you can be, insurance poor. And sometimes I think when you look at, let's just say it's $60 to add service line coverage, that might make some sense immediately. But then you also do have to wear with all these things. Hey, if you own 10 properties, the chances of this happening aren't really great. And then you're increasing each policy by $60 or so, so there is like a, cost benefit, which I think, so I'm not saying it's the right move for everybody, but I think those are three policies that are, three coverages that aren't always included and often aren't, that sometimes, are worth having a discussion about.
Before we continue, I want to take a quick moment to thank our sponsor, Trust Realty. As a Philadelphia landlord, you know that managing rentals can be complex and demanding. That's why Trust Realty, a full-service property management company in Philadelphia, is offering all of our listeners a free rental analysis or management advice session. Trust Realty handles everything from marketing your vacancies and through tenant screening to rent collections and maintenance. They work side by side with you, and they work with both single families and small multifamily properties, and committed to helping you to grow your portfolio. So to claim your free consultation or rental analysis, just send an email to info@trustrealty.com or give them a call at 267-929-1500. You can also find a link in the show notes to fill out a quick form, and somebody will get in touch with you. So how would a claim work for a policy like that? Let's say we have an additional policy for the lateral sewer line, and it breaks, and we need to dig up the asphalt or concrete and replace the pipe. And we have tenants in the property, so we don't have time to go back and forth with insurance. We need to go and do the work. So can we go ahead and hire a plumber, do the work to get it fixed, and then get reimbursed from the insurance? Or we have to file a claim and go through the process before anything can be done?
I think the general rule with insurance is you want to mitigate additional damages right away. But you also want to tell your insurance company right away too. I think, no, if you just say, hey, I got this done a month ago, this was a $20,000, $15,000 repair, here's some receipts, like that would be an issue. But yeah, you immediately do what you can do to stop the bleeding, or to stop any additional damage, so to speak. And I would get in touch with them. I mean, with all these coverages, but just like with again, just go back to like a kitchen fire, which is something I always think about. You do have, coverage with your insurance company. You should, with, like the fair loss of rents, where, hey, if you have a covered loss and you can't rent out, your property while it's being repaired, you do have that coverage on your policy. You should have that coverage on your policy. So,
And that part comes standard with landlord policies.
yeah, I mean, I think sometimes you have an option to decline it, but it's not too often that people do. But yeah, so I think that, yeah, generally though, hey, you do want to work with your insurance company and you do want to notify them, and it may slow the process down a little bit. But I also think that you do have that coverage if you can't rent the property and the tenants need to go elsewhere for a time being, that you aren't going to have that loss of income because you have that coverage.
Okay, and you touched on something as well with the claims with the insurance, that you don't want to have that small claim be on your record. So how would a claim affect your ability to get insurance, and would that affect the premiums that you pay going forward?
I mean, yeah, I think I mean, I'm hesitating a little bit because I got like a lot of carriers with a lot of different rules, right? But
Right.
generally speaking, you could lose discounts. You might be getting a claim-free discount that you're going to lose, which, depending on the amount of your claim, you just want to weigh that out. Again, like every carrier is going to have their own appetite. So, if you have a claim on a property, it certainly doesn't make it easier to get insurance on that property. Or sometimes you have a claim on your record, you have multiple claims on your record, you go to buy another building. Some carriers, that's going to follow you. Some carriers, they'll be a little more specific to the property. But it's a tricky thing because you can never really discourage anybody from putting in a claim, and your insurance is there if you need it. But is it going to be the best financial move for you? Based on a possible increase on future properties, and maybe a little bit more difficulty finding insurance. So that it's a lot to weigh out. So, but as insurance agent, we want to protect you. We want to be there for you. We don't really want to discourage you from putting in a claim, but at the same time, is it the right financial move to put in a small claim or to put in a potential claim? That's one thing I would really, I think is a good thing for landlords to keep in mind, is depending on, like, when you're talking to, especially if you talk directly to the carrier, if you're not sure if there's a coverage or not, or if there's a claim or not, or if you want to put in a claim or not, you don't want them to put in a claim to find out. Yes. I mean, there's a certain point where you have to, because you never know for sure until you dive in. But there are cases where somebody's like, yeah, this was never going to be covered. I called my insurance agent to ask them, or I called my carrier to ask them. They put in a claim. And even if there's a zero claim, if it's a zero payout claim, there is still that claim on the record every time, and that's, I think, maybe intuitively you and I might be like, hey, it was zero payout, what's the big deal? But when you're looking at large numbers, and maybe the insurance companies are looking at, how likely are you to call your insurance for everything? Even that zero payout claim can affect your rates. So I would be very careful about, calling with hypotheticals or calling with a potential claim. It's like, hey, I don't want to put in a claim right now. I'm just looking for advice.
Okay. And for all of these insurance carriers, what are you talking about? You put a claim and now it's in your record. So there is some kind of common database of my insurance claims that every insurance carrier can see?
Yes. Yeah. I mean, that would be the short answer. There is a shared loss information. Not every single carrier subscribes to it or belongs to it, but most do. So yeah, they all ask it on the application as well, which,
Right.
You're risking, you don't answer, you sign something that's not accurate on that application, there's a risk in that. But yeah, there is a shared database that, so yeah, there is a good chance that they're going to see that when you put it in, when they're figuring out your rates or going to complete an application.
And is it going with the name that's on the deed of the property, or who is it connected for? So let's say I have 5 properties and each property is on different LLC. So would that be specifically to that LLC in that property, or if I claim one of them, it will be on the record for all 5 of them?
It's a little bit of a tricky answer to that. I mean, I think the most straightforward thing to say is that most carriers will, if you have an LLC deeded, most carriers will want the name of the LLC, name and birth date of at least one member of the LLC. So it still might come up with a different LLC. I do think that there are smart ways to shield. I think an LLC is smart. I think that there maybe is a little bit of an extra layer of protection and that kind of stuff. But I think that I don't think it's something that that's 100% insulates you from claims by using different names of LLCs. But, that wouldn't be the reason to do it. It's not a bad thought though.
Okay. And I keep hearing it more and more often here in Philly that a lot of carriers do not want to insure properties because, or not all of them, because they are too old or they were built before 1945 or before 1960, whatever they say. So how here in Philly we can make sure that we can buy a house and we can still get a decent coverage for it without paying some crazy money for insurance?
Yeah, I think if it's been well cared for the most part, I mean, you're right. And that's why we have to have more than one carrier, is because, some carriers are going to be like, I'm not going to insure a flat roof. I'm not going to insure a row home with more than 5 attached. I'm not going to do this. And that's why kind of you as an investor, need to have a broker that you can rely on that does have a lot of options, or it has the really right options in Philly, or it's going to be different for every property. But I think there is something to be said for for having somebody who will shop, or and it saves you a lot of time too. Instead of you shopping with 10 different brokers, you have one or 2 that you can really rely on. I think the main thing I would just say I'll say with Philadelphia, you could also probably say it with anybody, is knob and tube wiring is very, very difficult to insure. And there's a reason for that. That's one thing I always want to say when people argue with me for. There is a much greater chance of a fire. But I think if you have a property that is, the major systems have been updated within like the last 20 years, the last 15 years, that's, which is going to kind of happen as part of normal maintenance, for the most part. But I think you have to just, I think if a landlord should know that, which in this environment right now, roofs is a hot spot. So, how recently that roof was done, and the condition of your roof is going to have a lot to do with what carriers and rate are going to insure it and what rates you're going to see. So like not every property is the same, and I think sometimes you're like, well, at this other home I'm getting this much, or this guy next door has got this, but if the property next door has a better maintenance record and and has like a brand new roof on it, they probably qualified for a better rate than somebody who didn't. So I do think that you really want to watch your cash flow and how much you have to invest in every property, but you also are going to save insurance and have a lot more insurance options with something like a newer roof, instead of just having an older roof and trying to switch carriers, or have an actual, you do have other stuff you can do as far as actual cash value on the roof, or roof exclusions, which, of course, mortgages don't like if there's a mortgage. But yeah, I would just say that I would avoid knob and tube wiring, and I would just make sure the property is relatively up to date and up to code, and that would be my advice.
How does the age of a home affect the premium, or it doesn't really matter as long as it's kept well?
It can matter. I mean, it's still like, an older property is still going to probably cost more, in part because of that replacement cost, and they used like much more expensive materials, like prior to 1945, or but I also feel like the property being maintained is more important than how old it is. But it every carrier is different again, so I hate to keep kind of going back to it, and that's why we try to find the right one. But yeah, there's some carriers are just going to say, hey, we don't insure anything that was built after prior to 1960, but other carriers will, and especially if it has a newer roof and is well maintained, you're going to get really, really better rates than otherwise. And another thing that I would keep in mind is the immediate neighbors, especially with like row homes, attached homes, because if the property next door to you is not well maintained or is boarded, that's going to have a lot to do with your property, and what kind of insurance you can get on your property. So, I do think having good neighbors, if I can, not no State Farm reference intended there, but I think having, neighbors that kind of take care of the property, and they certainly are not like vacant boarded houses with graffiti on them 2 doors down from you, is going to make a difference on your insurance as well.
Yeah, we actually had a case earlier this year, I think, or maybe last year. We had a property in Brewery Town. It was a beautiful property, absolutely fully got rehab, done just to pristine condition. Everything was beautiful. But right next door to it was a vacant property without windows. I don't think it was even boarded up. And the owners of the rehabbed building, they were selling it, and the buyer could not get insurance policy. I think State Farm told them flat, no, we're not going to insure it. They eventually found insurance policy. They eventually were able to buy it, but they had a few no's before they found somebody who would insure it.
Yeah, I believe that for sure.
Okay, so Tom, what would you say are the biggest insurance mistakes that you see landlords make when they buy a new property or have a property already and changing the policy?
If you say one single biggest mistake, it's just like, not worrying about anything except getting coverage on there and what the rate is, and maybe not knowing much about your coverages. I think, or hey, is it the actual cash value policy, or is it a replacement policy? Or, that's something you can say about almost every insurance policy is like, a lot of times people want the least expensive thing they can find and they don't really care about what their coverage is until they need it, Yeah. But so I do think it is worth having a 5 or 10 minute conversation, especially if you're, or longer, depending on how experienced you are, but I think that is, I think that's the biggest thing I would just say, is taking a minute to make sure you understand your coverages. But I would also, being aware of your deductible and coverages, because like I said, if you don't talk to somebody about like water backup, and then there is a water backup situation, you're going to really wish that you had and you didn't, so I do understand everybody wants, that's what we do. We want this to be as affordable for you, and we want your cash flow to work. But we also want you to have coverages. And I think, like I said, I think just being aware of how, because insurance properties, and insurance companies are smart, and they are looking at your property as a risk individually. And I think sometimes, people kind of have it that, well, if the insurance company wants me to do this, or they want me to do that, I'm just going to find a different insurance company. And every time you find a different insurance company, your rates are going to probably go up a little bit. And truthfully, probably was good advice anyway, as far as, if you need a new roof, or if you need a hand railing, so, I think it's just worth, talking to your broker, especially as you're new to the game, of, hey, what exactly am I getting? What are my options with different coverages, and what's important, to me.
And what happens when you have a rental property and tenants move out? So it sits vacant for a while you're looking for a new tenant, and now market is flipping, so it takes longer and longer times to find a new tenant. So you have your rental property, but it's vacant for maybe a month, maybe 2 months. Do you need to do something with your insurance product, or you're still going to be covered?
Some carriers will have like an extra coverage for that particular situation. I think it is normal and expected for there to be a little bit of time in between tenants. But I think it's good to talk to your agent about it and to just be aware of it. And what, if you're going to use that opportunity to do some significant upgrades, or even not so, if you're going to do some upgrades while when you're long-term tenantly using for 3 months, you're going to renovate before it's ready for the next one, then you really have to have a discussion about coverages. If it's like, hey, we're going to put on some paint and we're going to advertise this within a week or two of it being vacant, then it's not as often that there's any type of issues. But I do think that expectations for it being advertised and filled, and like I said, if you're going to all of a sudden put in new carpeting, if you're going to do something major in between tenants, you should let them know and make sure that you have the right coverage for it.
Okay, so what is the right coverage then in that case? If you say, let's say tenants move out and you decided that, oh, I'm going to replace my kitchen countertop, I'm going to put granite instead of whatever that plywood I had, or I will spruce up bathroom and I will put new tile. Do you need to?
That stuff I don't think is a big deal. Usually, I think you're mainly looking at a little bit of time frame and a little bit of the extent of the renovations. Certainly if there was a claim that, and it turned out that the property had been vacant for 3 months and you were doing more involved something than just putting in a countertop or putting in, new carpet quickly, that's, I think there is a communication factor, and I think sometimes we will run things through underwriters of the carrier, but I don't think that I think some upgrades and stuff are pretty normal course of business. But if you're doing something that's a little bit more involved and the property is going to be vacant for certainly more than 30 days, you definitely want to just touch base with, hey, is this going to be okay, or do we have to add an additional rider, or do we need to put like a vacant renovation project if insurance on it if need be. So that is going to again depend on what your carrier offers, but I think the biggest thing is communicating with the carrier, or particularly the agent, like, hey, this is what's going on, do we need to do something different? Because like I said, I think there is a common sense element that, hey, you might put in new carpeting or fresh coat of paint, but if you're going to start knocking down walls, or you're going to put on a new roof and do X, Y, and Z, at that point, and it's going to be vacant because you did sign for a policy that's not expected to have vacancy for more than 30 days, and you are doing some significant renovations to it, then that's a little bit, you want to just make sure you clear that with the carrier or see what the best course of action is at that time.
Okay, and something that I just thought of, since you mentioned roof multiple times, that brand new roof may be something, a cost saving on your insurance policy. So let's say we have a property that I don't know, we had for a long time and it's occupied, and now we need to replace the roof. There was a leak or whatever, so we put brand new roof on the property. Can we get a discount on insurance policy if we installed a new roof?
Yeah, very often carriers will have new roof credits, or they will just give a discount for a new roof. Like I said, not every carrier, everyone has their own philosophy, but very often you definitely want to have that discussion. Or when you put a new roof, that's also a possible time to shop. I do think that's one thing too, when you're talking like advanced advice, I should say, for landlords, is like, when you think you're going to save $100 or $200 by switching to an insurance company, to be aware that there will be an inspection, and sometimes you think, and if all of a sudden you think you saved a little bit of money by switching insurance carriers, but then all of a sudden a new carrier is like, oh, well, you need to put a new roof on it, or you need to do this X, Y, and Z. There's a certain amount of unknown with an inspection. I think, there's common sense, and you want to be able to guide through it. But I also, I think you need to be fair, and a lot of times maybe showing pictures and more carriers require pictures of the property or the exterior, so you make sure everybody knows what they're getting into. But I do, I don't like to happen. We try our best to avoid it, but that is something that, hey, you think is to be a little bit aware of like the age of your roof and the condition of your property. And because a new carrier is going to do a new inspection, and it's possible they may want you to put in a handrail or something, which is common sense that you might want. But I would also just be aware of, like I said, the time to shop a property maybe, and time to be a little bit more careful when you're shopping. And when you put on a new roof, you open up a lot of new carriers that will be interested in your property, and you also have a brand new roof, so that's a better time to shop than when you need a new roof and didn't do it yet.
Yeah. And how often do you usually recommend to shop for a new policy? Just every year at the renewal time, or like, is there any rule of thumb?
We're happy to do it like every year. To a certain extent, we do. If we see, especially if we see an increase, we will shop it. But I also think, there's something to be said a little bit for being tenured with a carrier at times. If there's a claim that you like, hey, I have a long relationship with you, but you also are saving money sometimes when you shop. So I just think that I wouldn't say it's necessarily, I do feel like, yeah, it's not a bad idea to shop every year, or especially every 3 years. But I also would keep in mind, what kind of condition the property is in, and kind of be aware that there will be an inspection. And if there is something that could be an unexpected expense, or maybe an expected expense with when they inspect it and they're like, oh, well, you need to do X, Y, and Z, and so like we really do our best to clear these things with underwriters before we do it. But don't hide anything from me, because I'm working for you. So it's like, hey, yeah, they didn't know about this X thing, and then they go out in the inspection and they see it. I think that's another thing is thinking about general advice is be really careful about what kind of dogs you allow in your property. And pit bulls, they get better. I work for volunteer dog shelter stuff, but at the same time, like insurance carriers are seeing a lot more risk with if they have somewhat of an aggressive dog breed. So I would be very, very careful about that. I require all your tenants to get tenant insurance or renter's insurance.
And we touched it a little bit talking about vacant properties, but can you tell me or tell us a little bit more about builder's risk insurance? What is it, and when do we need it, and why do we need it?
Builder's risk is something that we do a lot of. You need it when you're renovating a building, or it's going to be vacant for an extended period of time, which usually goes hand in hand with renovations. But I think that's a little bit different. Like when we talk about replacement costs, like a builder's risk, you're not often going to get like a full replacement cost. You're going to be like, hey, property's worth this much right now, and I'm going to put this much money into it. A lot of times, like the coverage is a sliding scale. Like you say it's worth $100,000 right now, and I'm putting $50,000 into it over the course of 6 months. That renovation is kind of assumed to go out throughout. Like, if you had a claim on day one, you're not going to get that full $50,000 renovation budget because you didn't spend it all yet. But I think when you have I think it's very common to particularly to buy a building and that need, at a good price, put some money into it, and it's worth a lot more, and you can get a lot more with the tenant. So I think the first step is usually a builder's risk type of policy while you're renovating it, if after you purchase it. And then the second step, when it's ready for, you have a signed lease, somebody's moving in the next week or two, that's when you would switch to a tenant-based policy.
And you switch it at the time when the property becomes occupied, not at the time when it's fully completed.
Right. Again, it's going to depend a little bit on it. Some carriers are how strict. We have like a carrier one time I can think of, and this is maybe an extreme situation, but they just completed a beautiful renovation project, and they were kind of refinancing a loan, and the carrier wanted to decline it right away as soon as we submitted it, because they saw that it was being advertised as vacant. It was vacant because it was being advertised, but at the same time, he was going to have it occupied, very shortly. But so that's like a little bit of an extreme example. But I think as a general rule, just starting the business relationship off on the right foot, and there is an expectation that it's certainly going to be occupied within 30 days, and usually that's the way the contracts are written, that's going to be occupied within 30 days. And then even if it's 2 weeks out, and they inspect it and they can see that it's vacant, they're going to ask a lot of questions. And at the same time, the vacant policy is still going to cover you even after the renovations are complete. So I think it's the timing can vary a little bit, but ideally, when you have a signed lease that somebody's going to move in at a certain point, that is probably the best time to go switch the insurance from a vacant policy to a tenant-based policy.
Okay. And would you start shop for that policy ahead of time, or do I wait until I have a tenant and then I call you? Hey,
Yeah,
Tom.
I mean, it's better. I mean, like, we can always do a rush if we need to, right? But at the same time, we sometimes will have people who are like, yeah, I bought a house, I'm buying a house tomorrow, and there's no mortgage, so I forgot about insurance. And, we get insurance on it, but at the same time, yeah, I think it's a better process. It's more thorough that you can be like, hey, this is going to be occupied within the next 2 weeks or, month. So let's start working at prices. If you look too far early, like the quotes are no longer good and you kind of have to run new quotes and new stuff. But I think when you think you're in that, 2 to 4 weeks out is probably the best time to start to shop.
Okay. Tom, do you have any advice on measures that landlords can take to lower the insurance rate over time by doing some preventative maintenance? You already mentioned the roof. With exception of roof, is there something else that can be done to affect the rate?
I think that, obviously the roof is the sore point. So I keep bringing that up because that is a hot button. But I also feel like, yeah, I mean, it's a little bit, I don't want to just say curb appeal because that's kind of a silly way to put it. But at the same time, like, if you just sort of looked at that lens of, hey, insurance carrier is looking at an exterior picture of my home. Are they seeing like dry rot? Are they seeing a chimney in poor condition? Are they seeing siding that's missing or needs to be replaced? Are they, one thing I've run into a couple of times more recently, just even like on a like a porch or like a deck, is there like a plank missing? There's certainly a liability risk in that. So I think that just looking at your property with a fresh set of eyes and those types of things are going to make it more, because I do think generally there's exceptions to this, but as a general rule, to get the best rates, they're going to be a little bit more careful about their inspections and what properties they take on than somebody's not. Like, there is a little bit of a matching the property to the insurance carrier, and the insurance carrier, the best rates probably is for the ones with the best maintenance on them. But I would just say again, like, weigh out whether it's smart to put in a claim. I would say that, make sure your systems are relatively up to date, particularly as no knob and tube wiring. And I would say that that's my best guess. And yeah, like I said, the roof, drywall, the dry rot can be an issue, but I think a railing is a minor issue, but someone that we see a lot is, if you have pretty standards, if you have 3 steps, their insurance company is going to want a railing. Yeah, I would just say there's a little bit of a common sense approach of, hey, what's a potential liability claim? What's a potential issue that might cause an issue, with a house as far as drywall to a roof in poor condition and stuff, and kind of go from there.
Okay. Well, Tom, it was a lot of questions and a lot of information that we covered, and I have more questions here for you, but we're already running out of time. And what would you say the one thing that you wish every landlord knew before they file or before they need to file a claim?
Yeah, I mean, maybe if I was in that ideal world, right, they already know really what their coverages are, and they're not like, oh, for the first time wondering if they have coverage for this thing or not. But I think the best thing, is to call your, make sure you've just been honest, not even just honest, but you've also just kept your insurance agent like up to date, or the carrier up to date about what's going on with the house and if anything has changed. But I think that, you put in a claim, I mean, you don't have to do it instantly, but you want to do it in a timely manner. And, you want to work with it. Like, the insurance companies are going to, generally speaking, they're going to really work with you, and they're going to be fair to a point. They are going to be fair. There's always crazy exceptions, but generally they are. But I think that, putting a claim in a timely manner, be very straightforward about what happened and what's the situation with the property, and make sure, if anything dramatically changed with the condition of the house, the company knew about that beforehand. So I think that's the biggest thing. Is I would just, if you bought that as your primary home and then you moved out of it 2 years later, and then now you still have a primary home policy on it, like, and then you have a claim, that's an issue. So that's my best advice, is to just, anything changes with the condition of the house or how you're using it, make sure you let your agent know.
Makes sense. Well, Tom, thank you so much for all of your information and wealth of knowledge. If any of our listeners would like to get in touch with you and talk more about insurance and what they can get, what is the best way to get in touch?
Oh, yeah, no, I certainly appreciate it. It's been great to be on there. I'd be happy to answer any questions. Tom at dsainsuranceragency.com. Tom at DSA, like Doug Susan Apple, insuranceragency.com. I think Lehigh Partners is our website. And, 610-440-1524. I said that quickly, but, whatever's easiest for you is easiest for us. And we'd love to answer any questions and be whatever help we can be to assist you.
Yeah, and we'll put your contacts also in the show notes so people can grab it if they have any questions. Thank you for joining us, and we'll see you maybe next time. That's a wrap on today's episode. A big thanks to Tom Cassidy for breaking down the complex world of insurance and providing actionable advice for all of us. Remember, a cheap policy that doesn't cover your risks is more expensive in the long run for you. This is all for today, and thanks for listening. I'll catch you up in the next one.